Hey traders, it's Stephen Brooks, and today we're going to be talking about what will change after this coronavirus recession, depression, whatever ends up happening here. Now, there's a lot of things that are going to change. There are plenty of things that are going to change. If we remember back to the financial crisis of 2008 and 2009, there are many things that changed as an outset of that recession and of that bear market and of that crash. But the things that are going to change moving forward out of this are going to be a little bit different. Now, the biggest thing that I see that's going to be much different after this than compared to what was happening before this, and again, this is the recession, bear market, depression, whatever you want to call it, that we were in since the coronavirus hit back at the end of February, hit the United States. The biggest thing to me is going to be a pickup in inflation, okay? A pickup in inflation. Now, let's kind of talk about this for a second. A pickup in inflation. What does that mean? That means prices go higher. Okay, I'll kind of explain it here in a minute, but how do we get inflation? Well, remember, a lot of economics is based on supply versus demand. Okay? Supply versus demand. Now, inflation comes about all based off of what's going on in our currency, as an example. So if we look at what's going on in Venezuela as an example, they're in a situation of not just inflation, of hyperinflation. And what's happening is, as the value of their currency in Venezuela is going down, right? As it's going down, well, prices are just going higher to kind of counteract that balance. So what we've seen over the last few weeks from not only the Federal Reserve, who's currently printed more money than they ever have in such a short period of time, that their balance sheet, and when we talk about the Fed's balance sheet, we're just talking about how much money is kind of out in the system, if you will. Their balance sheet is currently today higher than it has ever been. On top of that, United States Congress just passed a spending bill, a stimulus bill, which, by the way, is a fantastic deal for any business out there, but they just passed a very large bill, starting at $2 trillion, but can go as high as $6.3 trillion. So what that means is the level of debt that is going to be held by the United States and most countries around the world, but specifically the United States, is going to be much, much, much higher than it has ever been. What is going to end up happening is, because there is more money in circulation than there has ever been, at some point, the value of the US dollar is likely to go down, okay? At some point, the value of the US dollar is likely to go down. It may not be the next day after we kind of bottom and return to a normal economic cycle. It may not be the next day. But the more dollars which are printed, okay, the more debt which is taken on by the US government, the weaker over time the value of the US dollar should be. Now, the question is, okay, Stephen, well, this idea of taking on more debt, printing more money, that's not really new, especially when it comes to the United States. Well, the reality is, one of the reasons why the US dollar hasn't fallen at this point is because there is so much demand for US dollars. One of the biggest reasons why there's so much demand for US dollars is what's called the petrodollar, right? 20, 30, 40, 50 years ago, the United States made an agreement with the Kingdom of Saudi Arabia that all oil bought and sold by them would have to be done in US dollars. So if any country wants to buy oil from Saudi Arabia, they have to do it in US dollars. What has to happen is, if they don't have those US dollars, if they have some other currency, they have to go ahead and they have to buy US dollars, which increases the price and increases the demand of US dollars, and that has really kept the value of the US dollar going down. But at some point, we will reach, if we haven't already, such high levels of debt and such high levels of just how much money is in the system that even something like the petrodollar will not be able to keep up with the demand for as much as how many dollars are being created. And what's going to end up happening there is inflation. Now, there are many misconceptions when it comes to inflation and what happens to other values of either currencies or assets based off of inflation, okay? Here's what typically happens in an inflation type of situation, okay? Again, the US dollar will go down and prices will go higher. That means food on the shelves of the grocery store. That means to buy your average products, goods, or services. Those will go up because the value of the dollar has gone down. That makes total sense. That is a standard and simple supply and demand type of situation. Now, what about for us? Because on this channel, we talk about trading and investing in finances. So what does that mean for us? Well, if we do get inflation, which I think is just a matter of when, as opposed to if we will get it. Again, we're printing insane amounts of money, more than we ever have in a shorter period of time than we ever have. And our United States government, although interest rates are insanely low, they've never been this low before, they are taking on an astronomical amount more of debt each and every year. At some point, we're going to kind of hit that level that says, hey, even though there is more and more demand for US dollars, because if anyone wants to ever buy or sell oil, they have to do it in US dollars. At some point, that demand, even though it's going to be there, is not going to be nearly as high to kind of offset what we're doing with just adding more and more and more and more and more money into the system. So what currently happens in the world, what has happened in other countries in situations where there is inflation? Well, there are a few things that do happen. Number one, the currency goes down. And of course, that makes a lot of sense because if there's just more and more and more and more of that currency in circulation, simple supply and demand tells us, well, then that value of that currency should go down. On top of that, what we've seen in other countries is that gold goes higher. And again, one of the reasons that gold goes higher is because it kind of is a offset of the US dollar. So if US dollars are weaker, then the value of that gold in US dollars is going to go higher. Again, if we look at Venezuela, which is not in inflation, it's in hyperinflation right now. As the value of their currency goes down, the cost of gold in their currency goes higher. Just, it's kind of a, as one goes up, the other goes down type of thing. On top of that, even in Venezuela, that has social unrest, socialism has failed them in Venezuela. They have social unrest and they're in hyperinflation. Stocks are going up. Stocks are going up. And then on top of that, interest rates. Interest rates also go higher. So one of the big reasons why we have such bad economic news and such bad health news, and we are more or less in a human crisis right now, one of the reasons why we're having a tough time continuing to sell off from here in a very big way is because people are starting to wise up to the idea that if we just print all this money and do it over and over and over and over again, at some point, that barrier is going to break and US dollars are going to be less valuable than they are. Again, at this point, the petrodollar has really helped in terms of the demand for US dollars. And on top of that, the United States economically is so much more superior in not only size, but in strength and might than every other country in the world. That has really created a lot of demand. But at some point, even with all that demand, there's just going to be so much US dollars in circulation that at some point the value of that dollar is going to go down, and that's when we will get into that inflation. So a lot of people get concerned about inflation. Those folks on CNBC or Bloomberg who have never made a trade for themselves in their lives, they're talking about how inflation is going to be so bad. The reality is, over time, historically, as inflation has ticked up, as interest rates have gone higher, it's actually been a really good thing for stocks. So one of the reasons why we haven't been able to continue to crash very hard from these levels in the stock market, even with all these really bad headlines, is because people are starting to wise up to the idea that, hey, it's likely that at some point on the other side of this, we're going to get inflation. And what has inflation done? Every other time, well, the currency has gone down, yes, but some things have gone up in value, like gold, like stocks, and interest rates have gone higher. So one of the big things that I see that will kind of finally, in my opinion, tip the United States in sort of an inflationary environment, which we have not been in a very long time, is the fact that we're just printing so much money. And if And if the situation never gets worse from here in terms of the coronavirus, well, we're still at that level where we printed just an insane amount of US dollars. If the situation continues to get worse, then the Federal Reserve is going to print more money and the United States government is going to take on more debt and do more stimulus. So kind of either way you cut it, I do think at some points we're getting a lot closer to an inflation situation, which we have not really seen here in the United States for a very long time, 50, 60 years, but have no fear. Have no fear, because although the CNBCs and the Bloombergs will tell you, oh, inflation is so scary, actually over time, and with a large enough sample size all over the world, inflation has been good for gold, it has been good for stocks, and it has been good for interest rates. Again, case in point, take a look at Venezuela, who is in hyperinflation, which is basically inflation on steroids right now. Their currency is going down, but the value of gold to their currency is going way higher. And their stock market, even though they're in a horrific economic situation right now, there is social unrest in Venezuela, all that stuff, stocks are even going higher in the face of that. Why? Because of inflation.